It is time again for me to update you on my recommendations for your overall portfolio allocations. What this means is you should know how much money you have in savings. That's money that you won't need to touch for a while, preferably 5 years. Hard to predict that, but at least long term. Then we talk about, well, what do you do with that money? These are my recommendations. I'm not a financial analyst. For whatever reason, I need to tell you that. But anyways, here's my suggestion. So first of all, 20 to 50% US dollars cash. You need to remember, although the market has been going straight up, and we will benefit from that on this part of the portfolio, we'll get to, we benefit from that well. But what if it suddenly goes straight down? And if you don't think that's possible, it's time to wake up, right? Could start plummeting tomorrow. Maybe it doesn't for a year. Who knows? But you want to be ready for that. You want to have some cash so that if everything crashes, you can put money in. Okay? Now, regarding your cash, if you're in crypto, you might like this idea. I've done a separate video on it from a couple weeks ago. You can look at where I talk about Dai, depositing it into compound finance and earning returns on it. I would suggest 15 to 20% of your cash, right? Not of all your money, but of your cash. So if your cash is only 20%, then 20% of that is like 5% of the overall, if you're following me. Okay, so 15 to 20% of all of your cash, you can lock up in compound finance as a deposit as Dai, which is a dollar peg token, and or USDC. Lock it up in there. You earn interest. You earn comp tokens. And I like the idea of selling off those comp tokens for cash or maybe ETH or whatever you want to sell it off for. But when you do that, the interest rate on that cash is 10% or more. It's been like that consistently for a number of weeks. So I think that is a place to put some of your cash. And I did a different video on why I think that is safe and not risky. I also think as a point, and I'm going to make also a video about this for beginners and getting to Coinbase. Make sure you have a good, solid crypto account that allows you to take money from the fiat world and bring it into the crypto world. You want to make sure that's up and running and the pipes are connected, because if someday, there is some sort of a panic, government starts coming after, they want to steal people's money. You don't think that happens? It does. Capital controls, when the government, says you can only withdraw so much money, etc. You're going to want to get that money into crypto land. And if you don't have your account open when that happens, you're not going to get it open. So if you have an account at Coinbase and you don't agree with any of my Ethereum and crypto, you don't want to buy crypto, great. Leave US dollars in Coinbase. You're not betting on crypto. You just have another bank account. Spread those dollars around so it's not so hard for the government to take them from you when they want. So there's your cash. Then with your remaining money, I recommend 15 to 20% now Ethereum. Okay, that is high. But listen, it's the only thing I think is really undervalued right now. Like, valuations are high on everything. My Tesla, I love Tesla. Love it long term. If you don't own any Tesla today, I don't know if you want to buy it. It's so expensive. I thought it was expensive at $1,000. At $2,000, and it keeps going up. I think you'll get a chance to buy it someday at lower prices, or at least lower relative prices. So, but Ethereum is not understood, the value that Ethereum creates. And I'll do another video. I'm going to do a video on Ethereum, another one. I'm going to do a video on DeFi on Ethereum, which is what is blowing up on Ethereum. Yeah, and I have some other videos. So anyways, that's for Ethereum. Berkshire Hathaway, 10 to 15% of your portfolio. I equate this, some of you might prefer an S&P 500 ETF. I prefer Berkshire because I trust Warren Buffett more than I trust an ETF. To sort of, in other words, again, I'm always thinking about what if the shit starts hitting the fan and the financial markets become sort of out of control and imbalanced, and the government starts trying to fix things, and the central bank can't print enough, and there's panic. I feel like, well, the ETF, what do I own? What do I really own? Whereas Berkshire, I think Warren will protect me, and I will keep what I own. But it is a diversified, it's like owning a fund. And the other thing I like about Berkshire, he's not piling into all the same shit as everyone, although it's a lot of Apple, which is part of the S&P 500, what everybody's in. But Warren Buffett, although he is a genius, he buys everything I would never buy, right? He buys oil I would never buy. That's sort of the anti-Tesla. He buys, he just bought a gold mining company. You know, I prefer ETH, digital gold. He buys, you know, so it's a great diversification for me in my portfolio, okay? Tesla, I love it, where they're going long term. It's super expensive here. This thing has had a run from 200 to 2,000. It's up 10x. It's like a crypto stock, a crypto investment, right? I don't like buying when things are up 10x. But if you're looking 5-10 years down the road, it will be higher. But it's easy to say, oh, I'll hold it for 5 years. I don't care. It can be a long time. Remember the video I made about Amazon, the scariest chart ever. Amazon, if you bought in like 99, you were underwater for 10 years before you got back to where you bought it. And then it went super high. It's like, oh, I don't care. I'll hold it for 20 years. Great. And you were smart. But for 10 years, you might have been thinking, I could have bought something else. Or you could have bought Amazon later at a much cheaper price and owned a lot more and had a bigger run. So be very careful of Tesla here. It's in stupid. I believe Tesla will be cheaper, you know, in the future. I like this ARKG, Cathie Wood's Genomics Fund. This thing, you know, like everything, it's had a great run, but long term, it's pretty good. If you're just starting with any of these positions right now with the market the way it's been, go slow. Do dollar cost average buying. That means, oh, I want to put $5,000 into ARKG, right? So put in 1,000 today. Next month, another 1,000. Next month, another 1,000. And you don't just buy, and don't buy on days, oh, it went up a lot, so I like it. No, it went down 2 days in a row, a lot. Everyone's panicking. Well, now's a good day to buy. Got to get that discipline. If you find yourself always wanting to buy when things go up and not wanting to buy when they go down, you're backwards. You need to just step back and watch and like learn to buy when shit goes down. Okay. And then REN. I will do a video on REN. I fucking love REN. This used to be, I called this tokens. I had a lot of different crypto tokens. And we will talk about how I am out. I don't recommend any of these things right now. The world has changed. DeFi has changed. We'll talk about it. The Ethereum network is congested right now. It's all about moving to level 2. The level of uncertainty on which tokens will survive is now, to me, impossible to predict. Except for REN. Boy, is this thing a winner. Fucking love it. And I even think it's cheap here. We'll do a video on it. Stay tuned. Subscribe to my channel so you don't miss. I'm about to make a bunch of videos. I release them. Subscribe so you don't miss them. All right? And then finally here, you know, you might have real estate. Another thing to think of, if you're sort of like, oh, maybe I'll buy a house in a year. This cash number, you're going to want to keep that higher, right? Or if you own real estate, that might take up a big percent. I don't own any real estate right now, right? So that would be a big number for me if I did. And you may have other investments and things. And this is related to what I like and what I think today. And it's a personal thing. This is not it's based on where you are in your life, what your income is, what you might be doing in a year or two, So this is something you have to personalize it for yourself. I try to explain based on where I am and what I know, but don't just copy me. And like what I also always like to tell you is you have to have your own understanding. Don't just buy ETH because I say it's great. I think it's great for a reason, but all of a sudden I start seeing and learning things change. And I'm like, oh shit, I don't like ETH so much. Guess what? I'm not going to call you. I'm not, I might tweet about it. By the way, Twitter, Dave Levine 0, the number 0, com. You can find me on Twitter. I may tweet about it. Maybe you'll miss the tweet. Maybe it'll be 2 months later. I get this with Stellar. People are like, oh, how much are you putting in Stellar? I'm like, didn't you see my video from September 2019 called My Stellar Capitulation, where I decided 0 allocation to Stellar? Almost a year ago, right? And people are like, oh, you said you liked it 2 years ago. Why don't you like it now? You changed your mind. Yeah, I changed my mind. Facts change. I loved Kyber Network. Loved it at 20 cents in January. Now I wouldn't touch it. Did I call you? Did I text you? But if you understood why I loved Kyber, and you follow the metrics, and maybe you have the same metrics, you would have seen what I'm seeing, and you didn't need me to tell you to get out of it. And by the way, again, I tell you to get out of it. It's not about buy and sell and when, and this is about an overall allocation. All right? Let me know your thoughts. Thank you.